Hello, Rick Komarek, Certified Financial Planner, and today I am bringing you the third quarter market update for 2019. So let's go ahead and take a look. As the returns in the stock market were positive for the third quarter at 1.16. However, the international and emerging markets were both down 0.93 and 4.25. So international certainly didn't do well. Sort of the winner was global real estate at 5.72. And returns on the bond markets were up, but we're going to see why a little bit later on and why there might be some concern about that. In terms of the world stock market performance with selected headlines in the third quarter, there's a variety of things that happened. The Dow shed 800 points in the biggest drop of the year over here. Fed cut rates. And so a lot of things going on and basically led to somewhat of a flat quarter in that regard. In other words, not a whole lot of movement. If we stretch it out a little bit further and look at 12 months, this is what the market has done over the past 4 quarters. So you can see there was a big drop, at the end of last year. That was Christmas Eve that we saw that big drop, and then some recovery and some dips along the way. You can contrast that with a long-term performance here of almost 20 years. And of course, here's the last 12 months and just the end of it right here. Okay, this next chart is very interesting because what it shows is that in any one given year, there's about an average of a 13.9% drop in any one given year. And you can see those drops within the year here in red. So for example, this year, the drop was 7% this year. However, last year, for example, there was a 20% drop within the year. That was that Christmas Eve drop that I talked about earlier. However, last year, the overall market declined 6%. So just because there's an average drop of 13.9% within the year, the actual years, typically end positive. In fact, here's the numbers: 29 out of 39 years are positive years by, the end of the year. All right, this chart here shows the 10-year Treasury. This has to do with our bonds or fixed income. And what I like about this chart is that it puts it in perspective in regards to inflation. So as of September 30th, the 10-year Treasury was at 1.68. So you can see the Treasury since the late 70s, early 80s have been trending downward for a long time. And they continue to remain low over the last several years at 1.68. However, here's the concern. That's the nominal yield. What if we look at it as an after inflation adjusted number? Where are we at with that? Well, it turns out as of September 30th, after accounting for inflation, you're basically losing money slowly on that. 0.71, negative 0.71 that is. So there is some concern with using treasuries, at this point for yield and not really giving us the returns that we're looking for. If you have any questions about this, your investments, retirement, feel free to reach out to me anytime.